All right, so now we're looking at section 7.6, which is dealing with preparing the cash budget. The cash budget is helpful more so than even knowing what the projected net income is. So we know that we want to know what the projected net income is, and that's going to be important for us. But a cash budget then allows a company to know how much cash it will need in the future periods, right? We know that the timing of both cash receipts and cash payments is crucial. We have to have enough cash to pay our bills, to pay our staff, to do all of those things. Uh, and we know that the cash doesn't necessarily come in the same time that our sales do, because sometimes we let people buy on account, so they've already received the merchandise and they're going to pay us later, so on. So we just have to be aware of that. So the cash budget helps us to figure out that timing. So the cash budget has three different main sections. It has our cash receipt section, which is the money that's coming in, our cash payment section, which is the money that's going out, and it also helps us to calculate for any financing that we might require if we do have a cash shortfall. So again, looking at Ash Furniture, they need to determine the cash receipts for the months of January through April. And so we're going for the cash receipt schedule. There's going to be four different components of the total cash that they're going to collect each month. And so cash and credit card amounts collected immediately when a sale is made. So even though, yes, sometimes if you do accept credit cards, it may take a day or two for you to get paid for that. We still count that pretty much same as cash. And then credit collections for sales that are made in the current month. So if we have sold something on credit and and then they pay us within that same month, the credit collections for 1 month after the sale is made. So 1 month has passed and then they're paying us, and then credit collections for 2 months after the sale has been made. And so the budgeted cash receipts in this chart and this information is also, and it's probably actually going to be a little bit easier for you to see on page 247, because you can then see what the little A, B, C, and D, what those correspond to, and explain this better. But the budgeted cash receipt schedule for Ash Furniture for January through April is shown here. January cash collections are what's explained in detail. So we see that they have the total revenue, which are the sales that they have. Then we see the cash that's being collected for that month, cash, and then also be the credit card receipts also, if people use credit. And then we see there the credit sales. So if they allowed people to have the furniture and then they're going to pay later, we see that. And then the amount of that that's going to be collected within the current month, which is B, and then C. And then we see then the amount that's going to be collected, what was from the previous month. So we see December, they had 180,000 in credit sales. So they collected 126 of it 1 month later in January. And then the 40,000, which was the 2 months out. So that would have been the portion from November's sales. And so the total credit collection, and then we see there at the end, the total cash and credit collection, the amount of cash that they actually are receiving. So now cash payments, that's the other piece. So we've talked about cash receipts, that's money that's coming in. Cash payments, that's money that's going out that we're using to pay our bills, that we're using to pay for inventory, and so on and so forth. And again, the explanation when we get there is on page 248 and 249 of the text. But we see different things. So cash payments are also known as cash disbursements or cash expenditures. Now, it might be that we're having to pay maybe via wire transfer, or we're having to pay maybe writing a check, but still they consider it to be a cash payment. So we see that Ash Furniture needs to determine the cash payments for January through April. So again, paying for inventory, and then paying for direct labor. So what, paying for our workers, operating expenses are paid in the month that it's incurred. And they also know that they want to pay dividends as well in March. And so we have to plan for that. Okay, so we see here some of the areas. So again, they had cash purchases in the amount of 78,360. So that's for January, and that's what. So they purchased materials or merchandise for cash. So they paid cash right away for that. And then they had credit purchases. Or hold on, that's the manufacturing purchases, and the cash was 3,918. And then they had credit purchases of materials of 74,442, and then they paid some of that within the current month. And then the same thing, they paid some of their cash purchases from the previous month from December, and then they still are paying some of it from November. So we see that. So this just lists out then what they're paying, and we can see that. So now cash we know is going to be the lifeblood of all organizations. So this is an important thing, we're looking at, we're monitoring. Without cash, the business is unable to pay employees and suppliers. And so we know that Ash Furniture, they have a covenant at their bank that says that they have to keep $20,000 minimum cash balance in their bank account at all times. So they have to keep that. So they have to plan that into consideration. And then anything over that 20,000 that's left over, they're going to use to pay the notes payable. And then if cash runs low, then Ash Furniture is going to require additional financing, and then they can borrow from creditors in order to meet those needs to keep that minimum balance in there. And so we see here just kind of a summation of what we looked at, the cash budget then. So we have the data that's going to flow from the cash receipt schedule and the cash payment schedule into this cash budget. And we see here, everything listed out. And so we see for January that they had a preliminary cash balance of 26,138. So they had 20,000 at the beginning, because remember they had to keep that in there, plus the cash that's collected minus the cash that's being paid out, cash payments. So the preliminary cash balance then of 26,138 is going to be above the 20,000 minimum. So therefore they have 6,138 that they will use to pay off their notes payable. Now, the cash budget shows additional borrowing required in February and March, which will add to the company's cash and notes payable balances. So we'll have that. Now, what information is contained within the cash budget? Is it the company's plans for acquiring and selling long-term assets? Is it the company's resources and business plans, the budgeted changes to the income statement during the period, or the company's projected cash receipts, cash payments, and calculation of any financing required? And it is D. So the cash budget is going to contain the company's budgeted cash receipts, cash payments, and the calculation of any financing that they would require.